Willy van Riet is CFO at Wienerberger. He joins me now. Welcome to the Berenberg European Conference here at Penny Hill Park. In a recent quarterly report, you set some profitability targets that you described as ambitious. Why was that, and what's the risk in not meeting that guidance?
There was not a risk in not meeting the guidance. The fact that we said ambitious is that we still had quite a lot of work to do in the last quarter. And as you would appreciate, we are still operating in markets which are basically still below the housing starts, are still far below the housing starts we saw back in the crisis year of 2009. So you can imagine that we were a bit cautious and said this is ambitious. But I can reassure everybody that we're now in the beginning of December. We're well on track on what we want to realize, and the targets are clearly achievable.
You set another target of 600 million euros in what you described as normalized markets. Now, what do you mean by that, and what's the time frame for that?
Let me go back a little bit why we disclosed this 600 million, which is basically 600 million of EBITDA potential of the group in normalized markets. We've gone through a very strong restructuring phase. We closed 70 factories over the last couple of years. We're still operating in more or less 230 factories, but the 70 in comparison to the 230 was a big chunk. So investors ask us, have you impaired basically the earnings base of the company? And that's what we wanted to demonstrate. With closing those factories, we've taken out 250 million of fixed cost out of the business. So we wanted to reassure people that by taking out the capacity, we still, but also the related cost, we still have the same earnings potential as we had before the crisis. Normalized markets for us means when we are back on an average market and a normalized standardized markets. None of those markets is actually, with the exception of two smaller markets, Poland and Czechia, none of those refer basically to the peak markets that we saw just in the run-up to the crisis. So actually we refer to a volume increase that we would need in Europe, 30 to 40%, and normalized markets in the US on by 1.5 million housing starts on an average.
Let me move on quickly. The Help to Buy scheme here in the UK has been a big story. Can you see other European governments embracing a similar idea?
There's a lot of talks about it. I think up to now, and credit to the UK government, they're the only ones who have actually stepped up and did something. There's a lot of talk again in markets about it by politicians, because in every run-up to elections, politicians like to talk about it. But one thing is certain. If I look all around Europe, affordable housing is becoming more and more of an issue. And the awareness of the problem is growing, because young people can't step into the market anymore. And there's one other thing. If I look now on how we would come out of this crisis, construction, and especially housing construction, is a very powerful tool, because it creates jobs, it creates day-to-day jobs in the local environment. And if politicians look really to enhance the economical growth, this is one of the strong things that they should in fact envisage and do. And we are lobbying very strong for that, of course.
Many thanks for your time and joining us here at Penny Hill Park.
Thank you. You're welcome.